Good afternoon, traders, and welcome to the Hot Stocks Outlook for September 23rd, 2016. So we are moving quickly through the month of September and really just a huge increase in volatility coming into the markets over the past few weeks here. And so, this is why it's critically important for traders to have the right tools and really an approach in place to go ahead and make sure that they're executing efficiently in the market and really making money as this volatility starts to come into the equity markets here. So what I want to do is really demonstrate how traders are utilizing this technology found within the Intermarket analysis software of VantagePoint to go ahead and make much better trading decisions, essentially to anticipate what's expected to happen in markets over a given period of time so that they can make much better trading decisions here. So let me demonstrate exactly how this works. And I've got a few chart examples for us here. Now, if you look here, I have a chart open for Schulman here. And these are all daily bars and candles. And you see we have a few indicators against the chart there. But before I go over interpretation of the indicators, I want to go over how those indicators are generated. So really how those values are arrived at for traders to then go ahead and make their trading decisions here. So you see on the left-hand side, I've gone ahead, I typed in the symbol here, SHLM, for a company here. We've got Schulman within the basic materials, plastics and resin maker here. But I'm going to go ahead and click on the market here and open up my properties tab to demonstrate, what's really going on under the hood here in the VantagePoint software. Now, VantagePoint performs what's called intermarket analysis. So it's analyzing other markets and how they're affecting and influencing and driving the target market that you're getting ready to trade. So in this example, we're talking about Schulman being our target market. And these are all those intermarkets that are known to drive, impact, and influence that target market here. So, this is very important, as what we're utilizing is a type of artificial intelligence called neural networks that are able to scan huge amounts of data. And so there's actually two patents on this approach here. And the two patents refer to that process for identifying all of these individual markets. So, it's able to identify those big macro markets that are really important for all traders to pay attention to, right? Like the dollar index, crude oil prices, interest rates, the gold market, the other currencies, euro, yen. As well as those ETF markets that are, critically important too, right? Like you've got material sector spiders here, industrial spider, some of those bigger indexes where these markets trade. But what the software and the technology is able to do is even identify a lot more of those subtle market relationships that can really trip you up as a trader if you don't have the means to identify them, right? So you see individual stocks here. So, other basic material companies, capital good companies, technology companies. And so one of those patents is identifying those 30 intermarkets that are known to drive the target market. And then the other patent being really weighing those effects, because some of these markets share, positive correlations, some are negative correlations, so they trade inversely or in tandem. Some markets have leading relationships, lagging relationships. And so this is why it's critically important to utilize a technology to do this type of analysis and really incorporate it into our indicators so that we can have a tool to make consistently accurate and profitable trading decisions in the market here. So looking at the chart here for Schulman, traders simply need to know how to interpret these predictive indicators. Essentially, what we're doing is using that intermarket analysis process to generate predictive indicators and really improve on really these moving averages as well as this predictive indicator at the bottom, which I'll go ahead and explain here. So let's go ahead and dig into the charts. Now, if you look against the price data here, and these are all daily bars and candles. So what happens is the software works off of end of day data, waits for all those international markets, currency, index markets to close, and then it essentially produces a forecast that's looking forward and anticipating future price movements. Now, what we have here is that if you look here, we have a black line there and also a blue line. Now, the black line on the chart, guys, that is a regular simple moving average. So simple moving average, very easy to calculate and interpret here, really just takes the last 10 close prices, calculates the value there, adds those values together, divides by 10, and that's all that really goes into calculating the value of that line. And so, simple moving averages do a really great job of really just summarizing what's already happened and essentially smoothing out that, last 10 or 15 or 20 days of price action, right? Now, against that, simple moving average or regular moving average there, we also have a blue line. Now, that blue line is VantagePoint's proprietary predicted moving average. So for that value to be calculated, It's analyzing those 30 intermarkets, how they're affecting, driving, and influencing that target market, and then anticipating, really making a comparison between an actual moving average, which tells us, what the market's currently doing, and a predicted moving average. So by looking at the comparison between these two values, traders can essentially forecast trend direction with a very high level of accuracy here. So what traders, really want to pay attention to are these crossovers. So where our blue line is crossed above or below the black line, signifying a trend change or trend shift in the market. Now, as long as that blue line remains above the black line, the trend is still forecasted to move higher. Now, you're going to notice that there will be those times where there's a lot of separation between the blue and the black line. That means there's a very strong trend there. There's a lot of separation between those predicted value and the actual value, signifying a lot of strength. When the lines pinch close together, signifying that the strength of that trend is weakening. But as long as that blue line remains above the black line, you want to maintain that position. The trend direction is essentially still to the upside there. So very simple indicator to interpret and use for your trading here. Now, let me go ahead and move forward to this next indicator here. Now, this indicator at the bottom here is the VantagePoint Predicted Neural Index. Now, this can only be a value of a 1 or a 0. Now, this is an extremely accurate indicator, and it's only 1 or 0, yes or no, very binary output. So very easy to use, and again, very, very accurate here. Now, what this indicator is doing is essentially anticipating short-term strength or weakness in the market. So short-term strength or short-term weakness over the next 2 trading days. So you can think of that as 2 candles or 48 hours into the future. So that's our very short-term 48-hour forecasting tool. And we want to really combine these 2 indicators to really anticipate, hey, what is likely to occur in this market moving forward here, right? So whenever we get a crossover between that blue line and the black line, essentially what we're looking for is that confirmation from that neural index. It says the trend has shifted, and at least over the next 48 hours, expect that strength as well, allowing you to get that good entry into the marketplace. And so we see what happened here in SHLM. Once that crossover occurs, you see your short-term forecast getting very bullish, really over the course of this, entire trade for the most part here. But really alerting traders that, now's the time to go ahead and get long the market and maintain that position as long as that blue line remains above the black line here. Now, just a very quick note here, for shorter term traders, whether you're shorter term, longer term, really not very important. You're going to have a very accurate forecast to really know what to expect in the market here. So you see, neural index drops down to a 0 here. You get that weakness over the next 48 hours, but the direction is still to the upside. And though this is what really helps traders make these better trading decisions day in and day out in the market. And you see, you need to hold on to that position to go ahead and be around for this 20% move to the upside. You see about 21 trading days over the course of this move. $4.84 a share. So, 1,000 shares, you're making almost $5,000 on a single position there, where the market really hasn't moved against you after essentially day 1 there in the position there. So let's go ahead and move forward through some more opportunities. But what I really want to demonstrate again here is how, you really have to have tools that are really actionable that you can, use consistently day in and day out, and they're going to remain accurate, whether it's to the upside, to the downside, bullish or bearish markets, whatever those conditions are. So we see here an opportunity in Diebold here, this being a technology company, makes a lot of those voting machines and things like that, ATMs. But we see here, we want to keep this interpretation of the indicators very, very simple. So when we get those crossovers, that alerts us to weakness in the market, that the direction, whether we trade options, whether we just go ahead and short the shares, we should be looking to, express this a trend to the downside, essentially, from this forecast. We also see that neural index confirming that short-term weakness, at least over the first couple days of the move. And again, as long as that blue line remains, below the black line, in this case, you want to go ahead and hold out on that position. And so you really see how this works over the course of a trade. About 12% move to the downside, $3.43 a share. Again, it's a very significant move on a market that was trading up at $28.40 just a little while ago. But again, you see the accuracy of this neural index. So, neural index coming up to a 1 after this trading day. Sure, you're getting that short-term strength in the market, over that 48-hour period, that movement higher in the price action. But direction still clearly to the downside. And, once that neural index gets bearish in line with trend, that's where you really get that excessive weakness in the market, and definitely don't want to be along and be making money to the short side there. So we see about a 12% move, $3.43 a share, very significant, just, 1,000 shares even, making a few $1,000s on a single opportunity there, and a great opportunity to, again, hedge any long positions you may currently have in the market. So, being able to take those positions to the upside and the downside, identify and be able to manage those opportunities really makes all the difference as far as, how you're going to have that P&L and equity curve moving forward and getting more, obviously, moving in the right direction. Windstream Technologies here. So, crossed over to the upside, very simple. Want to go ahead and get long that market. Again, you see the neural index will alert you to, that sideways price action, that short-term weakness you may have in the market. But once everything gets aligned, that's where you're really seeing those, aggressive bullish rallies over 2 or 3 day periods there in the market. But the whole key is, again, recognizing these opportunities at the right time. So you can take that position, lock in your stops, trail your stops, however you approach the market. But again, about 16% move, $1.40 on an $8 per share stock here. So already moved up to almost $10 per share. I think this thing was moving up a little higher today. So, that's really the key, is having that good timing so that you can really manage that position appropriately moving forward, and make sure that you're making money and being defensive with your capital and the risk that you have out there in the market. That better timing will improve how much risk you have to take at any given time on a given market there. So again, easily a couple thousand shares there, a few $1,000 move to the upside. And lastly here, I want to end on this market I covered, where this big green line here is on the chart, and, really demonstrating why, these tools are so important for traders and can really help you, think clearly about the types of trades that you're taking here, especially when volatility really picks up and enters into the market. So, the video is actually, I think, 2 Fridays ago when the S&P really sold off pretty aggressively. And you see here that this Goodyear Tire and Rubber forecast, really forecasting traders to get into this market all the way back at, $27 a share. But this is the whole key, is you see how strong this forecast has been over the past several days. And I think what I was mentioning is, on often some of these great trades, the best part of the moves are these sorts of gap ups. And so, that's why it's critical to have a tool where you see that, the separation between that blue and the black line quite severe, saying, look, hold on to your position here. The trend is still to the upside. Neural index getting very, very bullish. And you see just another gap up, which you have to be in position ahead of time, obviously, to make any money after that move up aggressively, in the after hours action there. So really great opportunity here in Goodyear. About 52 trading days, market's up about 20% so far, $5 per share. Again, 1 or 2,000 shares here, $5,000 or $10,000 to the upside. If you trade options, buying these options down at $27 a share, regardless of where that strike price is, you're seeing that contract improve, those premiums improve. So as always, thanks again. And again, this has been the Hot Stocks Outlook for September 23rd, 2016. Thank you all for watching. Good luck in the markets, and bye for now.